Hello everyone, welcome back to Safe Stock Investments. Today let us understand why China's economic growth has slowed below expectations and what this means for global markets and Indian investors. Since China is the world's second largest economy, any slowdown there can be influence businesses, commodities, exports and stock markets across the world. China's economic grew by around 4.3% in the second quarter of 2026, lower than market expectations and below the government's target range of 4.5% to 5%. This marks one of the slowest growth rates in recent years and has raised concerns about the country's economic recovery. The biggest reason are weak consumer spending, lower business investments, and a prolonged slowdown in the property sector. Although exports and industrial production remains relatively strong, they have not been enough to offset the weaker domestic demand. China is one of the largest consumers of raw materials such as iron ore, copper, crude oil, and steel. A slower Chinese economy can reduce global demand for these commodities, affecting exporting countries and companies that depend heavily on Chinese demand. For India, the impact is mixed. Lower commodity prices could reduce input cost for many Indian manufacturers, while exporters selling to China may face weaker demand. Investors should watch sectors such as metal, chemicals, engineering, and information technology for possible effects. Economics expect Chinese policymakers to introduce more targeted measures to support growth. These may include fiscal spending, steps to encourage consumer demand, and support for business rather than broad monetary easing. Such measures could help stabilize the economy over the coming months. For long term investors, this development is an important reminder that global economic trends can influence stock markets everywhere. Rather than reacting to short term headlines, investors should focus on diversified portfolio, quality companies, and long term fundamental while keeping an eye on global economic developments. Thank you for sparing your valuable time. Thank you for listening to this video. Happy investing.